following is a technical analysis on some of the largest components to the residential sector here off the daily interval, starting off with Taylor Morrison Home Corporation, a company of the consumer cyclical sector. And we are at a pretty well-rounded key inflection point. We have these huge divergent highs with near-term divergent high as well, just establishing and constructing, going back since May, the beginning of the year here, and amongst 2 out of 3 technical momentum indicators here in the relative strength index and the price percent oscillator, we have confirmed negative divergences that have only continued to establish and construct based upon this key inflection point. The near-term divergence is really constructed amongst all 3 key technical momentum indicators here below off that near-term divergent high. We have this primary talk about a well-rounded major price support primary uptrend line off the October 2022 reactionary lows, and that is a monumental key inflection point, whereas you have the 50-day and 50 exponential moving average just hovering and synchronizing with that strength of that primary uptrend line, and we slightly just hugged it throughout that key inflection point, back tested once again, and completely broke down below that 50-day and 50 exponential moving average. Now currently testing the 45.53 price support level there, whereas you could have a pretty steep, big counter trend rally, call it double-digit price percent to the upside, offering an additional objective scaling in short entry upon the 50 exponential moving averages, 50-day, and the bottom of that primary reactionary uptrend line. Additional key inflection points. If we snap right through that key inflection point, this is a beautiful, well-defined head and shoulder looking classic top here, where the neckline split was the 50 exponential moving average. So on a scale of 10, I have to put this up there with a 8 to 9 on a scale of 10 on a beautiful, well-defined price signal, sell signal. This is a solid red daily candle close. I'll call it a darn near 5% crash today, and that is as prominent as a daily time frame sell signal as you can possibly get there, whereas you have these moving average convergence in the oscillator starting to roll over into the zero line thresholds with nice red candle prints below some of these off the oscillator histogram below the zero line thresholds as well. If you've been following this channel for quite some time, a classic beautifully constructed head and shoulder can come with an extreme wave of selling. Onto the Toll Brothers Incorporated, a company additionally of the residential construction sector here off the daily interval. Again, well-defined, beautifully inclined head and shoulder, classic looking top with your dual left shoulder head, and then additionally your dual right shoulders there. And we have snapped, which corresponded and synchronized with the 50 exponential moving average. And that is a beautifully well-defined sell signals you can possibly get there on the daily interval on a minus 5% crash down below. Call it what you will. As far as any bull traders, long traders, they need to step in right here now, regain, have a complete bullish retracement of the and recovery of the 50 exponential and 50-day moving averages, and avert this price sell signal. Avert the price sell signal, burn off in an attempt to burn out and re-challenge those negative and bearish divergences here that have been constructing for quite some time here, with additional targets here where we're barely snapping. Again, a primary uptrend line here off the October 2022. Reactionary lows right across the board, big divergent high there, and that has been met so far with a price volume zone here where we could crack that 75.76 price support level and would be issued with a strong wave of selling. Further rate hikes are coming. The housing market, residential construction, home building construction stocks, I believe will have a long way to go to catch up with the 10-year yields. And additionally, some of the bond market yields that are hovering around levels, crashing below levels where stocks are still near all-time highs here. And it is just a long elevator down to the downside, taking the real estate market down, kicking and screaming.